Can your investments have a positive impact on the world? At Standard Chartered, we believe money can be a force for good. Through your sustainable investments with us, we're financing hospitals that are the heartbeat of local communities, funding clean energy to make electricity more accessible, and investing in innovative solutions to clean polluted marine habitats. Sustainable investments that benefit you and parts of the world that need it most. We're Standard Chartered, and we're here for good.
Assalamu alaikum. Hello, and a very warm welcome to our panel, Changing Sukuk Markets, Growth Trends in Islamic Finance. My name is Suad Bankreda. I'm the head of Strategic Investor Group Sales and a board member of Standard Chartered Saudi Arabia. It's a pleasure to be moderating the session for you today. As I was preparing for the panel, I looked into the statistics of the registration to get a better sense of our audience. I wanted to assess if we should make this a more specialized discussion on sukuks, or a more generic discussion around Islamic finance, which would be interesting for an audience which maybe hasn't done any Islamic products yet. Excuse me, please. So I tried to use some metrics, such as the regional makeover of the audience, to assess the content. And I was first of all very pleased to see that today we have an extremely diverse audience with registrations in more than 75 countries, and the regional split being surprisingly equal between the West, which I have defined as Europe and the Americas, and the East, Asia and the GCC, both representing 40% today, with the remainder joining us from Africa, my home continent. So again, very warm welcome to all of you. Given the large representation from the West today, I wanted to make sure that we don't get lost in specialized niche themes, but that we use this opportunity to discuss Islamic finance and the sukuk markets more broadly, the opportunities that they can present, how they have developed over the years, how Islamic finance links to ESG, and this will hopefully be interesting for everyone joining us today. But before we start, I'd like to walk you through a couple of housekeeping points. You can submit your questions or comments at any time. You don't need to wait until the end. The session is being recorded, and you can choose to either submit your questions anonymously or to disclose your name. I will try to weave in your questions into this discussion wherever I see fit. With that, and without further ado, let me introduce my wonderful panelists to you. Let me start by introducing them as I see them from my screen. First is Bashar al-Nattour. Bashar, welcome to the panel. Bashar is Fitch Ratings Global Head of Islamic Finance and is joining us from Dubai today, where I am also based. Apologies, I forgot to mention that. Bashar is responsible for coordinating all Islamic finance activities across Fitch's sovereign, financial institution, corporate, structured finance, infrastructure, and insurance teams. Bashar has almost 20 years of experience in Islamic finance. Since joining Fitch in 2007, Bashar has overseen Fitch's Sukuk criteria and Islamic finance practices. He has undertaken research and has written numerous published articles on Islamic finance. Prior to joining Fitch, Bashar spent 7 years at the Islamic Development Bank in a number of key roles. Before working with ISDB, Bashar was a senior auditor in Arthur Andersen. Bashar graduated with an MSc in Banking and Financial Studies from the Arab Academy for Finance, and he has a Bachelor in Finance and Banking from Amman University. Welcome, Bashar. Delighted to have you on our panel today.
My pleasure.
Thank you. Dr. Zamir Iqbal, PhD. Dr. Zamir is the CFO and Vice President of Finance of the Islamic Development Bank. He is responsible for ISDB's multi-billion funding and investment programs. ISDB has successfully issued several AAA-rated Islamic benchmark bonds. Prior to joining ISDB, Dr. Zamir served as the head of the World Bank Global Islamic Finance Development Center in Istanbul. He has more than 25 years of experience in capital markets, asset management, risk management, and the financial sector at the World Bank Treasury in Washington, D.C., where he will be joining us from today. Islamic finance has been his research focus, and he has co-authored several articles and books on Islamic finance. He earned his PhD in international finance from George Washington University and served as professional faculty at George Washington University and Carey Business School of the Johns Hopkins University. Welcome, Dr. Zamir. It's a real honor to have you on our panel today.
Thank you for having me.
Thank you. My next panelist is Mohammed Shahab. Mohammed is the Portfolio and Investor Relations Manager in the Investment Department of Noga Holding, Bahrain's national oil and gas company. Mohammed is responsible for Noga's funding, as well as the setting and the execution of the financing strategy for the whole group. He also manages Noga's portfolio companies' key performance indicators and maintains investor relations. Prior to joining Noga, Mohammed was working in the finance industry at Barclays in London for several years, where he occupied various business roles in the corporate and investment banking division. Mohammed holds a Bachelor's of Science from Georgetown University in DC. He also holds a CFA and is joining us from Bahrain today. Welcome, Mohammed. It's a real pleasure to have you with us today.
The pleasure is mine. Thanks, Saad.
Thanks, Mohammed. I have also invited two of my colleagues on the panel today. As mentioned in my intro, we wanted to make this panel as interesting as possible to an as broad audience as possible. So I felt that they both could share a lot from their own experience in the Islamic finance market dealing with a global client base. Let me start with Sam. We call him Sam, but his real name is Sarmad Mirza. Sam, welcome. It's a great pleasure to have you with us today. Sam is the head of corporate debt capital markets for the MENA region, and he has been with the bank for over 12 years, over which time he has been directly involved in the execution of an outstanding $75 billion, outstanding in the positive word, not in the sense that this is still outstanding. In addition, Sam is the ESG champion for capital markets in the region, and I have personally worked with him on numerous transactions. Welcome, Sam. It's a great pleasure to have you on the panel.
Thank you so much, Swat. Appreciate it.
Last but not least, I have my colleague Ahsan Ali with us today as well. Ahsan is the head of Islamic origination, responsible for the Islamic corporate, commercial and institutional banking business globally at Standard Chartered Sadiq, the bank's Islamic banking arm. In his role, Ahsan oversees the delivery of Islamic banking services to the bank's clients across multiple geographies and products, including financial markets, corporate finance, and transaction banking. He joined Standard Chartered over 17 years ago and has since then played a key role in building up the bank's Islamic business literally from scratch, making this an award-winning and industry-leading business. Welcome, Ahsan. It's a pleasure to have you at the panel today.
Thank you, Suad. Thank you.
So, coming back to what I said earlier in my intro, I would love to make this as interesting as possible to a broad audience. So with that in mind, I'd like to start with two questions, which are a little bit broader, and I would love to address them to Bashar. One is on the concept of Islamic/ethical finance, what that really means, and the other one more specifically, how the Sukuk markets have developed over the years and which trends we are seeing. Bashar, which helped shape the Islamic finance market with its Sukuk rating criteria. You deal with a variety of players globally, and you have personally witnessed the growth over the years. Please give us a brief description of the concept of Islamic finance and an overview of the Sukuk market more specifically. Thank you.
Thank you very much, Saad. And I think you've really laid the ground very clearly, and I hope that we will achieve the objectives that you've said. And I think this is definitely audience-driven. So I think the best thing is to start, why are we talking about Islamic finance, before I just briefly talk about Islamic finance. Islamic finance, if you look at Sukuk, for example, and if you look at the regions where Islamic finance is active, so the GCC, the Gulf countries, plus Malaysia, Indonesia, Turkey, I mean the Gulf includes Saudi Arabia, UAE, Qatar, Kuwait, Bahrain, and Oman. If you look at the actual issuance from these countries, you will find that around 25% is actually in Sukuk and Islamic finance. If you look at the banking sectors, if you look at financing in Saudi Arabia, you're talking about 82% of financing in Saudi Arabia is Islamic finance. Kuwait, you're talking about 42% of the assets there in the banking sector being Islamic finance. UAE and Qatar, you're talking around 28, 30%, and the list goes on. You can see it's a significant part of the DNA of how this region operates. So what is Islamic finance? Now, Islamic finance is one sect of a broader terminology, which is called the Islamic economy. The Islamic economy includes many things. The most thing that is people familiar with is halal, which is halal food. Halal food is something that you can see on the shelves of supermarket, wherever you are, in varying degrees. So Islamic finance is part of the Islamic industry that is similar to halal, complies with the Sharia principles and ethics displayed in the Holy Quran and the Sunnah, which is the guidance of the Prophet. So it's a faith, belief-based financing. In terms of how far it goes actually since the beginnings of Islam, almost more than 1,400 years back. And I'm not going to take you through how it evolved since then. We're just going to focus on the modern Islamic banking and Islamic finance and Sukuk. And this is started almost 50 years back, where before that, I mean, trading, so if you're trading with Indonesia, or if the region is trading with Malaysia, or within them, they've always used to use Islamic contracts. But what happened is, with oil becoming a substantial part of the global economy and being focused in this part of the world, dealing with the region entailed having to deal with Islamic finance. And here, the Islamic finance story emerged. So Islamic finance is, in a very simplified word, if that is something that can be said, it avoids riba. Riba has many, it's not just one form, it has various forms, but the closest form that I can explain it, it's interest. So interest in the conventional banking is not part of the DNA of Islamic finance, because it has a lot of things, and one of the concepts that you can look at, money cannot earn money. So just being wealthy and having money and lending it does not guarantee you getting a return. You need to have an underlying activity. You need to have an underlying transaction. You need to have a trade to generate income. And this is part of the broader base of wealth distribution, equality, profit and loss sharing. And there is a lot that falls under that. So you would say gharar, which is, you can have a lot of things with gharar, maisir, or what have you. There is a lot of categories that you need to pass. But in general, the concept is, it is something that is trying to do the transaction in a way that is compliant with Sharia. And Sharia entails many things. So some of that is profit and loss sharing, having equal opportunity, etc., etc., etc. So that's the broader term and the broader picture. And under that, and here quickly, if you look at Islamic finance, it's divided into 5 key areas. Islamic banks, which is around 70 to 75% of the whole industry. Sukuk, which is around 15% of the industry. And then you have corporates that operate under Sharia, Takaful that operates under Sharia. Takaful is Islamic insurance, and fund managers that operate under Sharia. And the remaining last 3 represent the remaining. So the biggest sects of this industry, that is roughly around 2.5 trillion currently outstanding, is Islamic banks and Sukuk. And if we zoom in, as Suad said in the beginning, on Sukuk, Sukuk currently, the outstanding volumes of Sukuk, if you consider everything, is around 700 billion US dollars outstanding globally, which is cross sectors, cross regions. This is something that has grown significantly in the past decade. So if you look at the growth of the industry, and I mean, as Suad said, I was in the Islamic Development Bank there, and when I was there, we were working about one of the first international Sukuk. And now you're talking about, if I look at Fetch, we rate around 150 instruments, Sukuk instruments globally, which is around 120 billion US dollar outstanding currently. So you can see that the industry really evolved from 1 or 2 transactions to now having almost 700 billion transactions. And it's represented in emerging market indices, as many of the Gulf countries like Saudi Arabia, UAE, and others are very active. So it's part of these indices where even the international investor, the passive one or the one that is doing their own balancing, need to look at it and have a story to look at. So this is what is Islamic finance. Well, how does it zoom out, and maybe zooming in Sukuk. So if you feel that you want me to zoom in on some of these issues, please do let me know.
Bashar, that was perfect. Thank you very much. And I'm very pleased to see we've got so many questions coming in already. So I will come back to you, Bashar, on some of these questions. But you made so many valuable points, Bashar, that I want to pick up a little bit later in the discussion as well. Let me ask Ahsan now, with his experience globally, being also agnostic what the product is, to talk to us a little bit more about what you mentioned, Bashar, this expansion and the development of the market. You mentioned it started 50 years ago. So let's go a little bit more into that and hopefully provide a picture of the development of the market. And also, Ahsan, if you can talk a little bit more about the Sukuk format. Is it just like one rigid product? What can you put all under that? And then from there, I will try to weave in the other questions. Thanks a lot.
Thank you. Thank you, Suad. Thank you, Bashar, for setting the scene. So quickly, in terms of the Sukuk, the product, and let me just take the geographical diversification point, right? So you did mention that the Sukuk originated, the two big pools of Islamic finance are, obviously the GCC and then Malaysia, Indonesia, and Southeast Asia, right? The Sukuk product did originate from these countries, 15 years back, around 20 years back, when we did the first Islamic Development Bank Sukuk, and the government of Malaysia, the Kingdom of Bahrain, etc., from the 2003-2004 era. And then past 10 years, the market has really expanded. Not only has it become mainstream in GCC and Southeast Asia, but it has also gone to non-Muslim majority countries, for example. So the government of UK has done two issuances. We were fortunate to lead both of them, one in 2014, and the recent one 2 months back, they have done the second one, 500 million pound sterling equivalent, which is equivalent to the government securities or the treasury bills. It has expanded to other countries. So the government of Hong Kong has done 3 issuances, Luxembourg, South Africa, etc. Now, where are we seeing the next phase of growth coming from? I would say Africa, I think, is the next phase. And Swad, you did mention that Africa is your home continent. Both in terms of North Africa as well as in Sub-Saharan Africa, for example, a lot of countries are now putting in place the legislative framework to to enable Islamic finance and to enable corporates and sovereigns to issue Sukuk. Many of them have already done it in their local currency space, and I think it won't be far before we see a few of them coming into the international dollar market as well. So many of the other countries in the world also are looking at it seriously, both setting up the legislative infrastructure and then the issuance framework to do so. And I'm proud that banks like us are in the forefront helping many of these countries come up the curve. We have already helped many countries, and happy to help others as well. So that is where the geographic expansion, frankly, is coming from. In terms of the product structures itself, the Sukuk market has gained a lot of momentum. So initially, we started with equivalent of a conventional senior unsecured bond. The Sukuk was just structured as I said, as an equivalent of a senior unsecured bond, where you just take the credit risk of the obligor and you get a stable cash flows equivalent in conventional terms, like a bond, right? Where have we gone now to? So if you look at the equity to debt spectrum, so if you say one side is equity and the other side is, a pure debt and pure equity, the Sukuk can accommodate anything in between. So if you look at the equity continuum, from that side you have the tier 1 and tier 2 issuances, the bank capital issuances. You come down in the middle, you have the corporate hybrid Sukuks. You go to the debt side, you have a project financing type of structures where you take partial equity risk and partial obligor risk. And then at the end, you have the ABS type structures where you take the mortgage-based securities or the asset-backed security structure where your recourse is to the underlying portfolio and not to the obligor. And then at the extreme end, you have the debt equivalent structure, which we all know, which is where the prime recourse is to the balance sheet of the underlying obligor, right? So, and in the this spectrum, past 10 years, we have developed product to cater to all of those needs. So I would say pretty much whatever is available in the conventional bond space, in this equity debt spectrum, Islamic finance can cater to all of those product needs as well. And not just in terms of the product, also in terms of the structures themselves. We started with a plain vanilla sale and leaseback type of structure, and now you have a plethora of structures where we use non-traditional asset types. We use mobile minutes for airtime or airtime for telecommunication companies. We use flying rights for airlines. We use a combination structures where we use some assets and some tradable, trading contracts like murahaba and mixture to reduce the reliance on assets for obligors. So all of these developments have led to the explosion in the Sukuk market. And it is not just Islamic countries or Islamic oriented companies which are coming to the market. This market is neutral and acceptable to all, as long as you have a sort of a business which can be, which is not non-compliant, or which you're not into alcohol or those kind of activities. You can access the Sukuk market. Pretty much anybody can come and access the Sukuk market, and the liquidity which has built up over the years, with the Islamic investor base. So thank you, Suad. I'll stop there and happy to question.
Thank you. I am so delighted to see so many questions coming in, which is amazing. But I would love to come back on this ethical point and on doing good, what also Bashar mentioned at the beginning, by talking a little bit about sustainability in this field, and address this to Dr. Zamir, who has really been groundbreaking in his work. So Dr. Zamir, ISDB has been the first AAA rated institution to issue a green sukuk, and you have successfully finalized a sustainable finance framework in 2019. And you are also committed to the Sustainable Development Goal Agenda for 2030. Last year, you've issued a $1.5 billion sustainability sukuk, and you've also issued a $2.5 billion sustainability sukuk earlier this year. You have personally, Dr. Zamir, been instrumental in developing the ESG framework. Can you please share your experience with the audience in terms of challenges you might have faced and opportunities on the other? And in this context, could you please also share the differences between Islamic and conventional bonds? Thank you.
Thank you so much. So it's a pleasure to be here. I think let me take your last question first, and then I'll come back. My perspective on Islamic finance is that this is just another financial engineering. And I think we should not just label that Islamic just because religious, but we should look at it as one aspect of financial engineering. So from that perspective, Sukuk and plain vanilla bond are not that different. Both are fixed income securities. Both have, the certain coupons, and you have a redemption at the end. So it technically is a bond. The way Sukuk is different than the typical bond is, as mentioned by my colleagues in the earlier sessions, that Islamic finance requires that the financing has to be linked with a certain underlying asset. So Sukuk basically has some sort of securitization of underlying assets, or earmark, or the indication of where the funds are going to be used for what assets. So in that sense, Sukuk indicates basically that I'm raising this fund for creating these assets or for the financing of these assets. But in terms of economic payoff, there's no difference between a plain vanilla bond and a Sukuk. It's just terminology sounds very exotic, but if you look at purely from a finance perspective, it doesn't have much of a difference. Now, coming back to our own experience, we as Islamic Development Bank, we are as old as the modern Islamic finance, which started back in mid-70s. We started in 1975. We have 57 member countries. We are a multilateral development bank, just like World Bank, Asian Development Bank, and African Development Bank. And we are the only AAA institution which have been issuing Islamic bonds or Sukuk in that sense. Now, as I said, that we have been doing it for all throughout our life, because our mandate is to have every financial contract needs to be complying with the principles of Islamic finance. But Sukuk is relatively new. We started tapping this market almost about 18 years ago. But since then, we have been growing very fast in that respect. Now, Sukuk has different structures, a different kind of, it comes in different flavors. But we have been issuing plain vanilla. But however, what we realized a couple of years ago that, our work, we are a development bank. We are as I said, we are just like another development bank like the World Bank or Asia Development Bank. And we have been doing sustainable development. We have been helping our member countries. Our footprint is all over the globe. We have been helping them with the sustainable economic development, which has taken all aspects. We were part of Millennium Development Goal. We are signatory of Sustainable Development Goal. And we just realized a couple of years ago, back in 2018, 2019, that there is a growing demand of ESG component of financing. There are a growing market out there of the investors who are very particular about doing good, especially in terms of ESG, especially in terms of social and green space. So we said we're already doing it. Why don't we kind of create a special labeled bond, which is basically tells us what we're doing. So what we did, we developed a sustainable finance framework, which was done in, I believe, in 2019, and that resulted in our issuance of first global euro Sukuk back in 2019 worth 1 billion euro. That was really a huge success. We were not expecting that, but it was a very good success. Now, our experience with the development of framework, that it was, I would say, much tougher than we thought. Because as we have seen that the global standards on the green and social bonds have evolved over the period of time, and we worked with a couple of stakeholders, and we developed the framework. And then what we did, we wanted to get it rated. So we went to Cicero and we got it rated. And very pleased to share that we got a medium green shade rating. So that's kind of was a very good thing. Now, what we found is that there is so much of overlap between the ESG component and the Islamic finance itself. Because as you say, Islamic finance basically comes back on the principles of some ethical principles, which allows you to promote economic and social justice. It talks about avoiding any kind of a harm to the society. It basically, so all the ethical and what you call responsible finance component is already built in the principles of Islamic finance. So for that angle, it was a transition from our Islamic finance to ESG or sustainable finance was rather easy. The tough part was basically formalizing it, developing the structure, developing a special task force, talking to the stakeholders, getting to know about ourselves. That part was difficult, but justifying the intellectual or the core kind of essence of what ESG is looking for, what Islamic finance offers, that was an easy part. Now, what we what we see that since we are at kind of AAA, and we got a very good response. After that, we issued a COVID-19 sustainability bond, which was 1.5 billion, which was oversubscribed. Very good, alhamdulillah, very good success. Then this year we did 2.5 billion Sukuk, sustainability Sukuk, and that again was very good success. Earlier this year, or maybe late last year, we also issued our first sustainability finance annual report, because we are required to provide that. And it's available on our website. I encourage everyone to have a look at it. It in details tells you what our impact has been, how many jobs we have created, how many environment sustainable cities we have helped develop, how much of the youth and kind of a women entrepreneurship we have promoted. So it's a very, very kind of a lengthy kind of a report. Now, from that angle, I would basically kind of say our experience is that the transition from Islamic finance to ESG was rather kind of easy, but marketing it, letting the people know that we required the some initial effort. Once people know about it, then we had subsequent issuance was relatively very smooth and very successful. Each of our issuance was oversubscribed. So from that angle, I would suggest that the experience has been extremely satisfying also, because people, our investors, do acknowledge our development work and they endorse it by investing in our Sukuk. I'll stop here.
Thanks a lot, Dr. Zamir. Thank you very much. Yes, and indeed, we do have a lot of questions coming in, which is why I'd like to combine two. So it's amazing. That just shows what I said earlier about the diversity of the audience. So we have one question from Anonymous, which is, for a Western issuer looking at Islamic finance as an alternative investor funding source, how complicated is the Sukuk market process for a first-time Western issuer? And then we have another question, which is there demand from Islamic investors for Western issuers of Sukuk paper? And would the investors need a price premium to less known new issuers? So it's actually both sides asking. And I would love to combine that a little bit and ask Mohammed and Sam to comment on both, please. So Mohammed, maybe you can share a little bit about, I know you're not a Western issuer, but obviously you are a first-time issuer. So if you could briefly share your experience as a first-time issuer, and then Sam, I invite you to come in to talk a little bit about this global dimension that has been mentioned. And then we have a lot more questions coming in that I will address shortly after that.
Thanks, Saad. Sure. And let me start by giving an overview of Noga Holding as a first-time issuer. So at Noga Holding, we are embarking on quite an extensive capital program for the next 5 years for the development of the Bahrain field to meet the hydrocarbon demands for Bahrain. And at the beginning of this year, we did tap into the conventional bond market, or GMTN program, which we did a private placement of 250 million on the back of. And while we were evaluating our options for funding, whether it's bank funding, the bond market, the Sukuk kind of came out at us because there was quite a high liquidity in the market. If you go back to the beginning of this year, and there weren't many issuances. So obviously there was quite a bit of supply in the market. And what we've decided is to establish a Sukuk program. You rightly said so. We don't have a program. And we aligned the establishment of the Sukuk program with the update of the conventional bond program. And I think that was good for us because it reduced the time that would have been needed to establish a new program. And we did it in a matter of 4 weeks, using and leveraging the commonalities between both in terms of the disclosure work stream, the auditor work stream, the due diligences, and all of that. So we added the Sukuk structure, and the Sukuk structure that we decided on at the end of the day, which was fit for our purposes, was the two-legged ijara and murabaha structure, just based on the kind of assets that we had. And maybe if I touch on the experience that we had, it was a positive experience in terms of having a new option for our funding requirements, like having a new pool of investors and diversifying the investors that we had. And the market conditions were very apt and ample for us at that stage. So we encountered, as a result, quite a large demand, an oversubscription of more than 5 times, and a reduction in pricing from IPTs up to more than 60 bips. So we felt like we were hitting 2 birds with 1 stone, if I could use that, in a sense of aligning both programs, adding the Sukuk structure to satisfy the Islamic and Sharia compliant investors' requirements. And as well, that came as a result of that at a much reduced cost. So it was about a quarter or a third of the cost of establishing a Sukuk program at a different stage. So that's something maybe to highlight there. Obviously, it came with its challenges throughout the process. And if I take my mind back to when we ran the process, the update and the changes in the AAOIFI standards and Sharia rules they change over time. So we had to comply with the new requirements at the beginning of the year with regards to the tangibility events and hitting a certain tangibility ratio, as well as appointing a Sharia advisor. And then the structure needed a bit of innovation and thinking while we went through the process. And finally, there is always an uncertainty when you go with a new thing. But I think with that uncertainty comes opportunity as well. So the challenges were very well worth it. And to get this optionality of tapping into a new market, having another pool of liquidity and connections with investors. If I go to just think about our issuances and we would consider it a success and why that was, the timing of the issuances was very important and very favorable to us at the beginning of this year, and the other panels can touch on that. Perhaps the liquidity in the Sukuk market, and it seemed like a lot of issuers used the existing programs to enter the capital markets when the rates were low at the conventional format. So there was a high demand there. And our ability to base our local and regional investors and connect with them, because they know our credit, they know us, they know our story, so they were comfortable with us, and we use that as a base to build up for our issuance. Additionally, the diversification of the investors. So there are Islamic investors from the regions, as well as investors from around the globe that were part of our issuance. The size of the deal, I think, is important. So when you look at the size for us, was we issued a 600 million, and it felt like that was optimal size to get the demand and then to reach out to the investors for that. And finally, the tenor. So there is this view perhaps that the Sukuk market does not offer long tenor. So we did issue an 8-year Sukuk, which might be considered towards the long end of it. And previously, we always thought that it was like, if you wanted, it would be like a 5 or a 6 year, but because to manage our liabilities and obligations, we needed a longer tenor in the current market conditions. So that's kind of where we went. And then finally, I think it all makes it easier when you have the right team around you in terms of legal counsel advising you, and a group of banks that are all on the same page for the issuance. So what I would say, I guess, just to touch on the earlier point that you said, is for a new issuer, it could be different, it could be uncertain, but don't be scared of going into the Sukuk market. It's definitely something we had a positive experience with, and additionally, it offered us the optionality to look at the most optimal funding for us now and in the future. And it's all about timing and accessing the market at the right point. So it comes with its challenges. There is more work in terms of the structuring that needs to be done, obviously, but I think it's from my perspective, from Noble Holding, it's definitely something worth considering from an issuer perspective.
Thanks a lot, Mohammed. I'd like Sam's views, just a minute or two, because Sam, you deal with global issuers. So on the point of, if you have never done one and you're a Western issuer, how complicated is it? And then there was just a question coming in as well about a conventional bond issuer looking to do a global issuance, which is very large, and maybe having several tranches and one being a Sukuk. So maybe you can just tell us a little bit about that.
Yeah, I think those are all great questions. I hope that they're asking that because they're seeing the diversity in this market. They're seeing from Mohammed's example that you can generate these incredible outcomes from an order book perspective, from a pricing perspective. All of that's 100% true. I think when you think about Western issuers, let me answer that first. The reality is, in the market at this stage, there are few. So the vast majority of the issuers are either Middle East based or Southeast Asia focused. And why is that? There's no surprise. Those are homegrown names tapping into the homegrown Islamic liquidity. That's exactly why, from a commonplace perspective, that's where it would start. Now, when you think about the regional appetite, traditionally, if you think about a pie chart or order book, where does that money come from? In any one of those regions, the Middle East or Southeast Asia, the home base generally contributes 50 to 55% of all of the demand. Then you see about, call it, you can split the rest of the half between Asia and Europe for the Middle East versus, Europe and the US for Asia. So effectively, the home base is extremely important. So the reason why I think a lot of Western issuers are not necessarily at this stage accessing these local markets is twofold. One is that this home-based demand is crucial to get the kind of demand dynamics that you want. And a lot of the local investors who are predominantly banks in this region or banks and asset managers in Southeast Asia have a very strong preference to invest on a relationship basis. So they want to invest with folks that they're lending to. So for example, Mohammed from Noga Holding, that's a core name for a lot of the banks in the region. That's where they want to invest. So if it's, Western company ABC, that relationship may not exist. And so a lot of these banks, who again are the core investor base, certainly in this region, may shy away. Now, our view and my advice to those who are asking and listening is that does not mean that Western issuers cannot come to the market. It's a very name-by-name driven basis. There is a lot of interest and excitement to bring Western issuers into this market, and there's a lot of motivation from local investors to be participating in some of these very sort of blue-chip names that would potentially consider Sukuk. So I think that's one factor. You shouldn't close the door if you're considering it, but there is that, local evaluation that you have to do from an investment perspective. The other part is pricing. Western issuers typically are comfortable or used to their yield curves in the West. Locally, that tends to be more elevated. So for the same rating in the West versus say in the Middle East, there's about a 30 to 40 basis point differential where the Middle East is more expensive. So typically local investors will want that pickup because they're used to that differential, whereas the Western issuers may not be wanting to make that payment. But there is a common ground. As I'll keep coming back to Mohammed's example, that's an example where you have a transaction that price tightens 50 basis points well inside their fair value, comes into a level that, effectively would be the equivalent of what a Western issuer might accomplish at the same kind of rating. So there is scope for that. The second question, is it difficult? I would say, anyone coming into the market for the first time, be it from the outside of the region or inside of the region, wherever, should probably factor that about 15% of the workload will increase. So you're used to about 85% of the regular process, the getting the disclosure ready, your investor presentation, your marketing strategy, but there's an added layer, about 15%, where you are looking at the structures that could fit you, the assets that you would require, making sure those assets are available to be able to make that all happen, and certainly fitting that structure into your prospectus. Kind of factor all of that in, you should assume about an extra 15% of workload and time. Usually from a cost perspective, you'd barely notice a difference. So again, if you think about all of the added demand you bring to the table, that's a pretty attractive sell.
Thanks a lot, Sam. I see 3 questions that I would really love us to somehow answer in the remainder couple of minutes, but I think they are important and they're very diverse. So one is on the standardization of Sukuk principles, the various Sharia bodies, and what role AAOIFI standards play. That's number one. And the second one is on the future of digital banks in the GCC as opposed to maybe the non-GCC world and how competitive they are. And one question is directly addressed to to Dr. Iqbal on microfinance. So I know it's ambitious, but they're so diverse that I would really love us to answer them just in 1 minute. So the question on the digital banks competitive landscape, I'd love to get Bashar's view because you see a lot. So what are your thoughts? And let me just repeat the question. The question from Murad Turka is, what are you thinking of Islamic digital / neobanks in the GCC region? Will they be successful when compared to other digital banks?
I mean, it's an interesting development now. Whether that initiatives or other initiatives successful or not, it's something yet to be tested and very speculative to say here. But you are dealing in a region that I would say have the infrastructure that can actually support such a thing. And having that in an Islamic format and an Islamic finance format, it broadens the customer base in countries specifically where you already have some awareness and knowledge of that. So it's an interesting development that's worth watching. How successful is of that? What is the market share? Are we going to see other ones? It is, I think, too early to say. But I would say it is different when you don't have that infrastructure. Because if you're sitting in the GCC or countries where you have that infrastructure and frameworks, it's easy to have that. In others, they don't have that luxury, but it's more of a need because you have a substantial population that is unbanked. You have a substantial population that is scattered around. Where if you look at the GCC specifically, the unbanked population is really low. So you have a high bankability. So the prospects, I would say, let's see, it's an interesting development. I think that is bound to happen. How successful is that is interesting, but the actual impact might be different if that exercise is done in another market where you have a low bankability there. And it's just, I hope I summed that in 1 minute.
You did very well, Bashar, mashallah. So, Ahsan, do you want to give us your opinion on the various Sharia body question and the AAOIFI standards?
Yeah, quickly, Aswad. So, having different, Sharia principles and the differences in the interpretation across markets, whether they're across the GCC or across Malaysia, GCC, etc., it's not new. It's been there, but despite that, we have had this huge surge in the Sukuk space and other cross-border Islamic financial products. So I would say, 90-95% of the principles are the same. There is maybe some 5% interpretational differences. And, it's the job of people like us to bridge the gap because we talk to the scholars in different markets. We know what the investors want, and we tweak the issuances as per the requirements. Yes, we are aware of that there is, some new developments in the UAE, but we work with the regulators, we work with the scholars, etc., to ensure that, we move forward on a commonly accepted principles, or I would say, like you have the gap, like generally accepted principles. Similarly, you have the generally accepted principles in Sharia, and with the, with that perspective, we are able to satisfy the needs of issuers and investors globally and move forward. So I wouldn't say that it's going to be a sort of a roadblock or deal breaker. It might just add a couple of more days to the process. Thank you.
Dr. Zamir, just 1 minute, please. The question from Alexander Schutz is Islamic microfinance. ISDB has been quite engaged in fostering Islamic structures to fund microfinance. However, we haven't seen much activity in this lately. What are ISDB's views on this now? Shouldn't there be high demand now? Shouldn't there be high demand still, especially after COVID?
Thank you. Thank you for the question. I think in principle, yes, I think we are very much would like to, especially after COVID-19, what we have done is we looked at it, what is the best way to boost the recovery? What is the best way to have the recovery done very quickly? And one of the intervention which we feel is that the best way to do is to promote, somehow provide financing to the SME sector, because these are the one which are engine for the growth. So what our strategy is that we are helping our member countries with direct line of finance or some other kind of financing to promote the SME sector, because we believe that they are the one which are hit the hardest. And within SME sector, we do see that especially the youth and the women sector, the entrepreneurs are hit hard. So we are basically, our priority at this time is to help promote, kind of revive the SME sector and make sure that they get the funding which they need. And hopefully that will expedite the recovery in our member countries. Regarding microfinance, we have done some direct equity in microfinance with some good results as well. But as you know, that microfinance is a sector which is a bit still quite, I would say, require quite a bit of development, and also, please, it's considered as a bit of risky. But at this time, our priority is more on the SME sector, and we hope that we could make a good intervention in that. Thank you.
Thank you very much, Dr. Zamir. So we have run out of time, unfortunately. And as you can see, it's such a broad and amazing topic. And it just leaves me to thank all of my guests today, Dr. Zamir, Bashar, Mohammed, Sam, Ahsan. Thank you very much. Thanks to the audience. I really do hope that this has achieved what we have set ourselves as a goal at the beginning. Thank you very much and stay safe. Thank you.
Thank you.
Thank you.